All right, morning all, and happy Friday. Welcome back to Monkapa. Aiman here. Right, so looking at the S&P 500, well, it closed higher on Thursday's session, recouping the losses from Wednesday. So I think it was driven by the energy stocks and also continued strength in the corporate earnings report, right? So the market, I think, has shown a resilience this week, showing off the earlier mixed results from some major tech names and also the ongoing uh, global tension over US-China trade talks, right? So the current narrative is, I think, bullish with investors balancing uh, the positive earnings momentum against the geopolitical risks and the eagerly awaited US inflation data tonight, right? So, looking at the economic calendar, so I think coming to next week, investors are waiting for the FOMC and looking at the interest rate decision on next Thursday. Right, so look at the China A15 DAX. Well, it gained yesterday, primarily on the back of the new 5-year plan, emphasizing on the tech and also strong, I would say strong domestic demand for 2026 until 2030. Well, this policy-driven optimism combined with the US-China trade tension talk helped the index rebound after a volatile, I would say a volatile period, right? So the key sector to watch those technology and also linked to the domestic consumption as China commit to a high quality economic development, right? As you guys are aware. So look at the charts now. Seems like the 14,700 are the strong support level after the index rebounded and now eyeing for 15,500 level, right? So okay. As for the WTI crude oil, well, it jumped around 5-6% yesterday to a 2-week, I would say 2-week um, high, driven by the new US sanction, right, based on the major Russian oil company. So um, as you notice, right, this actually immediately feel fears of supply disruption, especially after report that major Russian crude buyers, India, China, right, would likely to reduce the future um, purchases. So, right, coming back to our local market, Malaysia, the FLI closed higher yesterday at 16.13, right, reversing the earlier losses on bargain hunting. I think in blue chips like PIMB, TM, right? So I think the key drivers of the market, especially for this week, for this week, has been the local support stabilizing the market, and I think near the blue box here, or the zone, right, 1,600 level. This despite global pressure from the US-China tension and also the foreign fund selling, right? So I think we should maintain a selective approach, right, focusing on the domestic demand and also the defensive stocks, right? So yeah, we still keep our bullish bias at this juncture for FKLI and expecting the index to trend higher to test these 1635 points level, right? So I think in terms of day-to-day sectorial performance, right, we saw that healthcare uh, seems to experience a rebound, followed by a transportation sector added by 0.9% and also 0.8% uh, respectively, right, from yesterday's move. Okay, so yeah, I think since we mentioned on the blue chips just now, right? So can see that the banks are moving. I think recently our banking and analysts also upgraded the sector rating to overweight, right? So if you can refer to our watch list, you can take a look at CIMB, Maybank, and also do note that David and Nabil also have a top pick on Hong Leong and also Public Bank as well, right? So yeah, apart from the banking stocks, right? TM also showing good move, right? Hiking 2 almost 3%. And if you remember, I showed these charts right to you and the level. And true enough that the stocks is on its move towards the 7 ringgit 50 cent. Also recently we published a technical report on TM as well. And yeah, on 21st October. And right, I think formally the level that we are looking at 7 ringgit 70 cent after it has breached our resistance at 7 ringgit 40 cent level. Right, so looking at the FCPO, yeah, well, it saw a slight increase yesterday, driven mainly by the bounce in the crude oil prices and continued sign of strong Malaysian export, right? So, yeah, I think the price action is currently volatile, caught between the export demand and also the oil strength, and I think uh, the rival oil weakness also supporting the negative trading bias. So technical wise, we still hold our negative trading bias after the reversal pattern formation, expecting for the commodity to trend lower towards the 4,350 level, right? So for Malaysia trading stocks for today, we have SNS and Kerjaya, um, uh, for today, right? So I'll stop here and pass the floor to Aidil on his exit read result report. Yeah, thanks and happy trading, everyone. Thank you.
Hello, hi. So for Axis REITs has delivered their third quarter results yesterday. So for revenue, we are seeing a positive year-on-year growth of about 18%, while core net profit increased to around 28% year-on-year, which is in line with our expectation and also in line with the overall consensus full year estimates. This revenue increase was largely driven by the asset contribution from their 2024 acquisitions, which they made about 700 million worth of acquisitions in 2024, which now reflects a full 9 months contribution for these new assets. So that's why we're seeing a quite flattish quarter over quarter, while year on year we are seeing a very decent increase. Currently, occupancy remains unchanged at 97% from last quarter. And we do note that 25% of their total net lettable area is about to expire in 2025. And out of this 25%, around 82% of the expiring space has been secured, which we feel reflects a strong tenant retention and demand. For fourth quarter 2025, we expect earnings to remain stable with no new acquisitions completing by end of the year. Looking ahead, FY26, there are two particularly new acquisitions that would highly improve the earnings upside. One is the Bukit Raja in Selangor, which we expect to complete in fourth quarter 2026. And the other one is Bandar Sultan Sulaiman Port Klang asset, which expect to complete in first quarter 2026, both of which are currently vacant. On the funding front, Axis has locked in a 300 million 10-year sukuk at a very is at a affordable 4% rate. After which they will still have around 890 million funding headroom if they were any new acquisition opportunities that are present. Gearing level remains manageable at 33%, leaving ample room for future inorganic growth. So post results, we maintain our FY25 to FY27 earnings forecast with a target price of 2.23 ringgit, which is 5% upside from the current price. Our target price also implies a FY26 forecast yield of 4.6%, which we think is fair given the stable outlook for Reit's industrial assets. So I think that is all from me. Yeah, so happy trading, guys.